Ladies and gentlemen, my name is Greg Michalowski for ForexLive.com. This is a September 9th Forex day ahead. I'm going to take a look at a couple of major currency pairs that are in play here as we head into the new trading session. If you like this video and want to see more, click on the subscribe button. Also, if you want more information about foreign exchange trading, you can always visit our website at ForexLive.com on a daily basis. Let's take a look at the not that currency pair. I'm going to take a look at the euro versus US dollar. What are the key levels to look for in trading today? Well, first off, the trend has been to the downside in the euro versus US dollar. This has sent the market to oversold levels against RSI, against Bollinger Bands. But that oversold level can continue to be oversold. We can head all the way down to the 61.8% retracement at the 127.86 level if the market keeps the head of steam to the downside. What would keep the head of steam to the downside would keep the bears in control, in other words. And I go to the 5-minute chart here just to keep things simple here, folks. And if we go back to last Thursday and we look at the low that came in at the 19 level, and then look at the low on Friday that came in at the 21 level, and then move forward to today and put a Fibonacci retracement from today's New York session high down to the low, that 19 level is a 50% retracement level. So as long as the price can remain below the 19.21 level, so around that level, because remember we had 21 level on low on Friday, as long as the price can remain below that area right there, then the bias remains to the downside. And we have the potential to continue to extend the trading range to the downside in the new trading day. If the price moves above the 19 to 21 level, then all bets are off. Then we have the potential to correct further to the upside. So for me, the line in the sand overnight is at the 129.21 level. Stay below that level, the bears remain in control. Move above that level, then I'm going to be looking for a further upside potential for the euro versus US dollar. Now let's talk about the sterling versus US dollar. And this currency pair gaps to the downside on the vote from the for Scotland referendum. The poll said that Scotland was looking to actually form their own country, and this is more bearish for the pound versus US dollar. I put a weekly chart here up on the for the pound versus US dollar. Why? Because we have the 100-week moving average coming in at the 160.83 level. The current price is trading at 160.94 after just testing that 83 level. Our low for the day came in, or low for the week came in at 160.90. So we are very close to that 100-week moving average. As long as we stay above that level, that would be bullish. But if we move below that level, that would be more bearish. And if we move below that level, we have another key level down here off the weekly chart, which corresponds with the 200-week moving average and the 50% retracement. The 200-week moving average currently comes in at 160.02. The 50% retracement comes in at 160 even, and a little bit of change to really 160.00 or 0.9. And so there's good support down at the 160 level. There's good support down the 83 level. If we break below the 83 level, look for continuation of the trend move to the downside with a target of the 160 level for the pound versus US dollar. I wouldn't be surprised to see the price move down that level. Now, where might there be risk on the top side? And if I look at the 5-minute chart and look at the high price here in the New York session down to the low that we saw just a little while ago around the 90 level, the 38.2 to 50% retracement comes in at the 26 to 37 level. That a move above this yellow area would take us above the 100-bar moving average, would take us above the 200-bar moving average, take us above the 38.2, would take us above the 50% of this move to the downside. So that is my kind of line in the sand if you want to stay short the pound. Don't go above the 37 level, stay below that level, and look for further selling to the downside. Let's take a look at the dollar versus yen. This currency pair is also interesting. Why? Because we moved to new high levels, the highest level going back to 2008, September of 2008. Now, we also moved above the 61.8% retracement of the move down from the 2011 high to the 2007 high down to the 2011 low. That 61.8 comes in at 105.57. And we moved above that level, currently trading at 106.01. Okay, so we're a good 44 pips above that key technical level at 61.8% retracement level. Now, if I go to the hourly chart here, and I take a look at the hourly chart, here we moved above the 57 level right at this point right here, and you can see the market had momentum. We went up to the 69 level, which was the high price that we saw last Friday, and we had initial resistance against that level, but then regrouped against the 57 and moved above that level. But I want to focus here against this trend line right here, because this trend line has 1, 2, 3, 4, 5 different points on it right now. And as long as the price stays below that trend line, perhaps there's a room for a rotation or a correction further to the downside. That correction could take the price back down to the 69 level. It could take the price back down to the 57 level. It could take the price through that level, those levels, and move even lower still. We don't know how low the market might go on that. What we do know is that risk can be defined and limited against this trend line right now, right up here. And so as long as the price remains below that level, we could look for a rotation to the downside. By the way, the 57 level, I just put the Fibonacci retracement level, comes in right near the 38.2% retracement. So I expect to see good buyers down in this level. The risk up here is limited, but if the market should go down to this level, and for some reason, if it gets through the 57 level, look for further selling pressure to the downside. Let's take a look at Canada, because it too is at a key resistance level, also moving away from a key moving average, or moving averages, I should say. The 200-day moving average is this green line right here. The 100-day moving average is this blue line right here. And you can see that over the last few weeks, the market has tried to move below the 100-day moving average, only to fail each of the times. Every time we move below that level, we move back above the 100-day moving average. We may have closed a little bit below the 100-day moving average here, but that was about it, folks. We left all its little hairy tails down here and couldn't get below that level. So today, the market said we're going to the upside, and that was despite the fact that we had much better data coming out of Canada. Their housing data came out much stronger than expectations, but it didn't stop the Canada dollar getting weaker, the dollar getting stronger, and moving to the upside. Now, I did find some resistance against the 109.86 to 96 level, which is our recent highs, or our highs that we had all during the month of August. But if the market's going to continue to move higher, we need to break above those levels. And if we do, we're going to see further upside potential for this pair. What you don't want to see is a market to find resistance against here and rotate back to the downside. I have a horizontal line coming here at the 109.59 level. That level corresponds with this high price going back to the month of June. Let's use that level as a resistance level. If the price stays above that level, that keeps the bulls in charge. If it goes below that level, we'll reevaluate the dollar Canada. Remember, this pair has had its tendency of moving to the downside and upside and downside and upside and downside and upside. So we don't necessarily trust it, but we do like the fact that we moved away from the 200-day moving average and all these other moving averages down here. So that's bullish for that pair. Finally, I want to take a look at the Aussie versus US dollar. We fell below the 100-day moving average once again in trading. Talk about distrust. Every time the market moves above the 100-day moving average, it only stays up for a few days and then comes back roaring to the downside. So we're below the 100-day moving average now, and when we fell below that 100-day moving average, which is right here, we also fell below the 200-hour and the 100-hour moving average. So it was pretty fast and furious to the downside here in the Aussie versus US dollar. I put in a yellow area down here. If we move below those levels, that will keep the pressure to the downside here. So get below the 92.62 level on the downside, and we open up the door for further selling pressure. I want to give your attention to this level at 91.82, because if we move through this low, if we move through these lows right here, which come in at the 92.36 level, we could head on down toward this 38.2% retracement and 200-day moving average. Both of them come together at the 91.81.82 level is where both of those levels come in together, and that's going to be a really, really key level for the Aussie versus US dollar. If we break below that level, that opens up the door to the downside for further selling pressure. So there you have it, a look at some of the major currency pairs. We do have manufacturing and industrial production coming out of the UK tomorrow. We also have Japan machine tool orders coming out at 2 a.m. The UK data with manufacturing and industrial production comes out 4:30, along with their trade balance. Governor Carney from the Bank of England speaks at 6:45. So risk is increased in the pound sterling. Pay attention to those technical levels. In the U.S., we have NFIB, Small Business Index. We also have housing starts coming out of Canada at 8:15, and the JOLTS job openings in the U.S. coming out at 10 a.m. Finally, FOMC member Tarullo speaks at 10 a.m. as well. Market's going to be paying attention to that. My name is Greg Michalowski. If you have interest in this video and want to see more, make sure you click on the subscribe button. And if you want more information about trading foreign exchange on a daily basis, make sure you visit our site at forexlive.com. Good fortune with your trading. Bye-bye now.